Today, we're going to look at some of the positive changes that have been taking place in the stock market over the last few days and what needs to improve going forward to turn this bounce into a more substantial uptrend. So the first change, of course, occurred on just past Friday when we had the first 1% gain since August 29th. So this is a string of 26 straight trading days without one. As we can see, going back to the beginning of the second quarter, it is the longest string we've had all year, and much different than what we saw as the uptrend took hold back then, where we had clusters of 1% gains along the way that started to subside as July took over. And of course, from that point, the market tended to roll over, right? And so this actually is the longest streak going back to 2021. There were 41 straight days from the end of July to the middle to end of September here, and finally got the 1% advance that did not lead to an immediate low, but we did get one 2 weeks later on October 4th. So as we can see here, we had some bearish activity, typically in September into the early part of October. As we know, that's typical. And going back to the first chart here again, of course, we know August, September, both down 1%. Doesn't happen a lot. And again, October 6th was the big 1% gain, but the low was October 3rd, right? October 3rd, October 4th, all fits in to this seasonality perspective where you typically get a low, of course, in the early part of October, at least according to the average path over the last 20 years. And of course, that can then kickstart a good ending to the year. Okay, so far, so good from a blueprint perspective there. The other thing that happened was I finally busted through the steep downward sloping trend line, right? In fact, I got some follow through here. This is from a few days ago. And this is important because we've seen this before. 7 times prior, since the beginning of 2022, we've seen very steep downtrend lines eventually get broken, and they led to strong bounces each time. Now, some of them were short-lived, as we know at the beginning stages of the bear market. Some of them led to better outcomes over the next few weeks to months, most recently back in March, and we know what happened there. Now, we don't know what this is going to be, but at the same time, we can see how steep this line was compared to the other ones, and it seems similar. So we have to look for the next step, of course, to follow through from this. And over the last few days, it's been okay, but we need, again, more from this point. And so one of the things we need, or a number of them here, to get to an uptrend are these 7 steps that we look at. We need to hold support. That, of course, is what we did over the last few days. Knock an upside follow through. So far, so good. Make a higher low. That's going to be important. Form bullish pattern. We had that from a short-term basis. We'll look at in a second. Break out from that pattern. Achieve an upside target. And most importantly, repeat that process. So this is now looking at this from a 2-hour chart here. And this is what it looks like over the last few days to weeks, where finally, we're going down, but now this has formed what could be looked at as an inverse head and shoulders pattern. Now, some people like this to look a little bit more symmetrical, but we can see the general form, where if we do get that breakout through 43.30 and get an extension, the upside target will be 44.50. Again, not that big of a move, considering how far we've come down, and it just gets right back into where it was in September. But again, this is the beginning stages. This could be something to build upon. And again, we don't need just to see this one time. It has to be repeated. And from the beginning of April to July, there are 4 straight bullish patterns that saw upside targets hit. And that is, again, how an uptrend gets created. So we need this to occur first, or something like it, to begin that process again. Another thing that we'll see as things go along potentially is eventually get back to the upper Bollinger Band here on a rally, which again, we have not seen since the high here on July 27th. And looking back to how things changed coming off that March low, first time it tagged that line was right before the second quarter began, and then routinely went near the middle line, which of course is a 20-day moving average, and the upper line, which is 2 standard deviations away from it, and just continue to ride that, and honestly, in between the two until the top. Things have changed since then. So it's going to take a little bit more to get there. Of course, these will eventually narrow if the ranges stop, and so we'll have to see eventually get back up there. And so this is my favorite chart, actually. If you look back at the Bollinger Bands going back to 2021, you can see how different it was, where all these blue arrows just signify all the times when the S&P hit that upper band, basically the entire year, right? And even more importantly is that the pullbacks to the lower band were short-lived, which of course was a much different environment in 2022 when hitting the upper band only happened intermittently, stay close to the lower band, and there's just clearly a lot of volatility. Again, that changed after the low, but we didn't really see it get persistent until the second quarter began. And this part, again, represented or resembled what happened in 2021. So those are the steps we need to see improve from here. We'll be watching over the next few days, 2 weeks. We'll provide some updates along the way. Don't forget to check out these other videos and subscribe, and talk to you soon.